Hi students, today we are discussing the concept of the capital budgeting. In the previous lectures, we have briefly discussed the concept of the capital budgeting, why we need the capital budgeting and what are the main different techniques. We have just discussed the basic names of those capital budgeting techniques. So in this lecture, we will just discuss the concept of the outflow and the inflow. And see, for example, the company has two options that they can invest in the project A or they can invest in the project B. And for both investment, the total outflow means the total amount which they are going to invest at that time is how much, that is the 50,000. Either it is a project A or the project B. So they have to invest how much? 50,000 amount they have to invest. So this is the outflow for the business. Then both the projects, because all these are the sports values, so we are taking things in a very simple way. So for both the projects, the life of the project is how much? It is 4 year. Mean this project will give the benefit to the business for the next 4 year, like year 1, 2, 3, 4, and the benefit what they are getting in the form of the inflows or in the form of the benefit. So in the first year they will get 20,000, 25,000, 28, and 30,000. So this is the inflow what they are getting in the next 4 year from project B. But from project A, they are getting 25,000, same every year in the next 4 year. So now the company has to choose now that either they should invest in the project E or the project B. For this purpose, what they need the different capital budgeting techniques, like we have payback period, or it may be a net present value, it may be accounting rate of return, or any other investment technique they can use, like a profitability index or IRR. So these are the basic concepts that first of all we have to see that what is the inflow and what is the outflow of this project. So this is the basic concept that here we have discussed, that before starting the capital budgeting, we should understand the concept of the capital budgeting inflows and the outflow. In the next lecture, we will discuss that from where we are getting this 50,000 amount, how we are getting this 20,000, 25,000, 28, and 30,000. So these amounts will be calculated, and we will see that how, before going for the capital budgeting techniques, what are the basic calculations are required and how these values are calculated. So we will discuss this thing in the next lecture. Thank you very much.